So let's come to the question, how do I trade? How do I analyze the markets? So basically, one of the first things I do is I'm always looking at the higher time frame. There's no day where I'm not doing it. I'm always referring and applying the higher time frame. So how do I do it? I open the chart, it's a random chart. And basically I'm looking for the 1 day and 4 hour. Weekly, not that much, or not that often. And now, for what I'm looking mainly are the extreme points, the external extreme points and the internal extreme points. That means the external ones are the ones at the very outside of each range. So basically, okay. And now when we see this, we can see how the order flows at the moment, and we can clearly see even on the daily, that means we're looking right now at weeks and months of price action. We can spot a bullish movement, but listen, that still doesn't help us a lot. Why? Because we're scalping mainly, and we're just taking out a small portion of it. So this overall trend is still not very helpful. It helps us to find the main buyers, and now we are looking at the internal zones. Okay, internal, because it's still ruled by this one. And now we're zooming in. We can also look at the 4 hours. And what I'm now marking out, what I'm telling you right now, I'm doing in my mind. So I don't need to drag lines or whatever, or boxes. I see it. I don't need to draw anything. I'm trading on naked charts. But for learning purposes, I'm going to mark them out for you. And what I'm marking out is mainly the order block, means the first candle in the opposite direction of the main move. That means when you're looking at the upwards move, you're looking for the first negative candle, and this could be your order block combined with the first bullish candle. That means in this case, you see here it starts, and the first bearish candle is here, but because it's so small, you're looking for the next bigger one, and you got this one. So this is our box right here. And the same thing on bearish movements, then you're looking for the last up move candle, and in this case it will be this one. So you're drawing your box, and you have a clear supply, or in this case a demand zone. Just because of this price action, yeah, I can tell you straight up my idea. I got this idea within like 10 seconds right now when I'm watching this area here. I'm expecting either such a move or such a move. And now let's fast forward just so we can see how I read the price. Perfect, you see? Crack with the one. Just kidding. Relax. How did I came to the conclusion of this move? And you see, it ain't that deep, bro. Basically, what I'm looking for is how far the points where we're trading from are away from other internal points. So basically the next internal point from this point of view is this one and this one. Okay, if you ask why not this, because we took it out. You see, we took the position, or we took the market structure out. We broke it. And that's how you can get a feeling of momentum. And when you use it on a higher time frame, you can get a better bias for your smaller time frame trades. Because again, don't forget, this is a 4-hour move. But in this 4-hour, and this move what I expected or predicted here, in the lower time frame, you could go in every demand zone, in every support zone, bullish. In every single one, and you would have an insanely big win streak. Or when you would trade with a high risk to reward, you could easily catch multiple risk to rewards here. I mean, we can play this game a little bit longer. Let's predict the next move, Greco. So what I'm looking at now is, we shouldn't forget, yeah, we're in this order block, but we're in, not outside. We didn't broke it yet. But when I look at this, yeah, you're looking at the bigger picture. You see, even if you break this one, we still have this main one above here. And the rule number one is, never trade against the trend. Obviously, sometimes you can make great reversal trades. I will also talk about them in the next few chapters. But right now, we're just looking at the higher time frame and how to build the bias. So here, this is an internal high. We are close to it. And now people could say, yeah, the option is we're going to bounce from this and we will fall and maybe take the lows out. But in my case, it also depends on how the economic fundamental standpoint is. But when you see it's in a higher time frame for days and weeks, bullish with small setbacks, you should follow the previous trend. It's a bullish upwards move. So now, even though this is a higher time frame move, what I would expect right now is we have also like an imbalance here, that we could maybe fill it and then shoot up again, or we will ignore this one because the push is too strong. We will consolidate a little bit more and then push up. So I'm still bullish here. And now let's see. Boom. Look at this, bro. I literally predicted 2 movements just by flow. Okay. Now what, for example? Now we took out the highs. In one way, a coin has 2 sides, right? Head, and I don't know what's called in English. Tails, whatever, the numbers. You know what I mean? Option 1 would be, this is a sign that we're shifting aggressively bullish and we will still shift to the upside. Or this could mean we took out the highs, now we can take out the sell side liquidity and fall down, and this is our last high. Yeah, let me clean the charts. This is our last high. And the only answer for this are fundamentals or economic situations. We are trading gold right now. What's this? It's November 2023. And depending on if the overall sentiment is bullish or bearish, you can know which option is more likely, because the price is never just changing randomly in one direction on a higher time frame. There always needs to happen something before such a big important move can happen. Yeah, it only makes sense, right? It's logical. So let's say I don't know what here was, but just from the price action, yeah, just from the price action, I could expect maybe you can have right now a bounce back and then we will fall off, but you could take great longs here. Again, this is a 4 hour. There will be a lot of 50-minute or 5-minute candles to the upside. But just by looking at the price action, where we have the next, let's say, bigger zone. And with bigger zone, I mean zones where the price consolidated a lot. And when we look at this, just at this point here, we can see this area right here. So option 1 would be this. Option 2, we will fall straight into this one. And from here, we will see a bounce back. So let's see. And you see, perfectly described. Yeah, we saw a bounce back. Now we're fighting for the top side. And you see, because the chart, you can never predict every single candle logically, means you can never predict how smooth the price flows into where you want it to be. Yeah. So I said this box right here. Yeah, and you see we touched it by 1/4 of it and then bounced back, and now we're going straight into it. So I will predict the next move just to show you. So this move here was an unhealthy move from the price action. We see, let me clean the charts. We see we're falling straight down while swinging downwards. And normally, if this should be a healthy way down, we should have seen here the longs at the shorts, which will break and continue this downwards. Now, yeah, we can say it can also happen here. It can, because it's trading. But what this 1, 2, 4, 5 candles show me is something's changing right here in a higher time frame right here, and maybe this could be the start of a few longs right here. And for that, we are marking out the zone, going to the 50 minutes, and I will show you how you can catch a free long. This is a free trade. I'm 80% sure, 90% sure this trade should hit the TP easily. Let's go. Okay, there was a loan proof enough. We could take the stop loss to break even and just let the trade continue. We could also take partials at 50%, 70%, whatever. Yeah, it's all up to you and how you manage the profit taking. But you see, I read 3 times in a row the price action correctly, and this is one tape video. But let's see if the TP will hit. Boom. Yeah, perfect. And that's what I'm talking about. You need to figure out the higher time frame bias so it can help you for the lower time frame trades, but you still can trade against the trend when you are at some extreme points. But we will talk about this in the next few videos. But for now, just understand how to read the market structure, the movement and momentum of the price by just simply looking at the market structure and understanding why it can flow in a direction. You see, there's no magic, and you see, it's not complicated at all, right? So back to the daily. Let's fast forward it a little bit. Boom, what happened? Are we shifting downwards? Is it now a bearish move? What I say is, yeah, we got swept. This loss got swept, and we still didn't break any highs here. So it is maybe a sign of bearishness, right? I would say wrong. In this case, you still have to look at the bigger picture and to understand what can happen here. What do we see? Internal structures right here. We tapped into it. Internal structures right here. Not tapped yet. So my prediction would be 3 options. Either we're fighting here, consolidating, and then pushing up. We're falling down, testing this area again, and then pushing up. Or we're breaking the lows just for this zone to get tapped in, and then going up. Now you could say, hey, but when you expect a drop until here, you could just take a short. That's right. But these are just the options. Now you need to look at the price action, how it's moving in the next few candles, and then you can interpret the next step. So let's go again in the lower time frame. Let's go to the 1 hour this time. This is the 1 hour. And we have the zones right here. So let's wait for the price a little bit to move. So we see it's consolidating and going upwards. We didn't break out yet, but it is forming the first option. So now we're maybe a little bit late to the party, big push up, but entry point would be straight at the breakout zone. Now I hope for the replay that it turns back in so we can enter a long trade around this area here. Why do we enter here? Again, follow the trend and just wait that the price taps in back into important zones. When we didn't take out some important areas right here. What do I mean? For example, let's say this push, it's pushing up and we're taking out this internal high. Then, when the price drops down, as an example, doesn't need to be like that, it can be like that. Yeah? When it's dropping down, now this whole idea is already gone. Because this idea was only when we're still in the movement. But when you see we're taking out some different key points before touching your areas, these areas will be gone. Yeah, they will not be as effective as before the story. So yeah, now I'm waiting, and if we should retrace back, I am going long in here. Let's see. Okay, small moves. We're entering right here, 101. Let's see. Beautiful. Bro, this is all one tap. This literally shows how effective reading price action with market structures. Yeah. I didn't talk about any breakout blocks, any trend lines. It's all like combined into one thing, and it is price action. Yeah, understand the story you're telling. Understand why. I explained you why. Bullish movement. We didn't take out big positions yet. Yeah, big key areas. So we can expect the price to flow into the direction until something happens. And now it happened, bro. We took this one out. You see? Or at least we touched it. Now this whole story is different. From here, we could consolidate and still test the highs out. But still, at the same time, we could drop below to test the lows here or the lows here before we can expect something new. So what I'm doing here, I'm marking out phases from the price movement, and depending on where we are and what we're doing, I'm dynamically changing the direction. Yeah, I'm not like an average trader who says, okay, we're bullish, I will only go long. I also say we can go from here short. It also depends on which time frame you're using. Yeah, when you use a bigger time frame for the analysis, you should expect bigger moves. When you're looking at, let's say, 5-minute charts or 1-minute charts, everything will be a little bit different. Yeah, because when you're just looking, let's say, for this price action here, you could not or never expect such a crazy move. That doesn't make any sense. It only makes sense if you look at the higher time frame to find key areas, external points and internal points. So yeah, this should be a first small insight. We'll talk in the next more about how to implement it into the smaller and lower time frames.